All right, so I'm going to give you everything you need to know about the Southeast Florida market update. I've got 6 criteria here that are going to give you a really good idea on the pulse of what is going on in the Southeast real estate market for single family homes. The first criteria that we're going to work with here is our closed sales. Then we're going to go to paid in cash. That's going to be the people that paid cash, not a mortgage. Then we're going to go to the median sale price. That's going to give you right around the idea of the middle of what the sale prices are doing. It's going to give you an idea whether the market's going up or down. Then I'm going to go median time to contract, because this is basically days on the market. How long is it taking to put a property under agreement? Then I'm going to go with new listings. So what are the new listings inventory that's coming on the market? And then finally, our month supply of inventory. And this will give you a good idea of whether we're in a buyer or a seller's market. Now, we're going to go from north to south. We'll go with St. Lucie County here. So this is August of 24. It goes from right to left here. August of 24 of last year was 538 homes went under agreement. It was 475 August of this year. So that was down 11.7% on the properties that went under agreement single family homes in St. Lucie County. Now, if we look at Martin County, it's a different story. It went from 154 homes to 204 homes. Now that's up 32.5%. More homes went under agreement in August of 24 than August of 23. Very interesting. Let's take a look at Palm Beach County. Palm Beach County, much larger county. That was 1,113. It was 1,135. So almost the same as what it was last year, only up by 2%. Now, if we go back to St. Lucie County here, as of that last year in August of 24, it was 126 units were paid with cash. It went down in 25 to 118 units. So it's down 6.3%. So just not as much cash coming out of the banks or wherever it is in crypto or so forth into buying real estate. Now, if we look at cash in Martin County, it actually went up. So it went up from 61 units closed cash in August of 24 to 86 units in August of 25. 41% appreciation. So a lot more cash coming into Martin County over that year. It's an interesting thing. We'll keep an eye on that. Let's take a look here at Palm Beach County. It was 456 units were paid for with cash and went down 439 units. So basically St. Lucie and Palm Beach County went down in the people paying cash. And in Palm Beach County, it went down by 3.7%. Now, if we come back to St. Lucie County, this is the median sale price. So that would be the absolute highest, absolute lowest, what is in the absolute middle. I think this gives us the best idea of how much the market is appreciating and depreciating. It went from 405 down to 400, so only down by 1.2%. So even as those interest rates, and now the interest rates just kicked in, it looks like we're going to have another interest rate down this year, maybe 2. And so I expect this market leveled off. I'm expecting this market to kind of take off into next year, but we'll see. Now, looking at Martin County, it went from 577,000, a little bit of change with 500, and went to 582,500. That's up 0.9% in that median sale price. So looks like all those units extra that closed in Martin County actually raised that median sale price by a little bit, up to 582,000 in Martin County. Now, taking a look here at Palm Beach County, we went from 617,500 for that median sale price up to 630,000. So year over year, it went up by 2%. So these counties really hung in there. This is really a story of hanging in there.
Hang in there, baby. You said it, kitty.
Now, I want to get into the median time to contract. This is how long it takes for properties to go under agreement. So for you sellers out there, it's just taking longer. St. Lucie County here is an indicator of that. It was at 45 days in August of 24, went up to 64 days. So in that 1 year, it's taking, another 20 days on average for it to close, for properties to close. That's up 42%. So it's just taking longer year over year here for properties to actually go under agreement. Now, if we looked at Martin County, it went from 48 days up to 77 days. So taking a little bit longer than it does in St. Lucie County for these properties to go under agreement, about 60% longer. So properties are just staying on the market longer so far here in St. Lucie and in Martin County. Now, as far as Palm Beach County is concerned, not as much. It went from 81 to 88. So that year over year was really only about 8.6%. So just, looks like Palm Beach County is very healthy as far as, days on the market. Now, those actually is a high day on the market. In the United States, it's an average of about 70 days. But you got places like New Jersey and that, properties sell in a week. California, certain areas still selling in a week, but that's a national average. But so it's a little higher than the national average, but steady over that time. Let's come back here to St. Lucie County. New listings. This gives us an idea of, how many new listings are actually coming onto the market. We had 686 in 24 August, and we had 579. So it actually dropped. The new listings coming on the market was not as heavy as it was in 2024, actually down by 15%. Now, if we take Martin County here, the new listings coming on the market, it went from 245 down to 206. So it's down 15.9%. So a very similar trend. Less properties came on the market this year than they did in August of last year. So that's something to pay attention to. Less properties coming on the market. Let's see here if in Palm Beach County it was similar. It was. We had 1597. Well, it came on the market in August of 24 of last year. August of 25 this year, 1,469. So that's down 8%. So all three of those counties actually had less property coming on the market. All right. Now, lastly here, you guys know out there, if you watch my data, that I really watch the month supply of inventory. Now, new listings is one thing, and you might think that these two things are kind of opposites, but it's the properties that are still staying on the market and not selling. So the month supply of inventory, under 3 months of inventory is a seller's market. Between 3 and 6 is a neutral market, and over 6 months of inventory is a buyer's market. And there's a lot of people out there that are saying, oh, buyer's market, buyer's market, buyer's market. Not really. Technically not in the single family home market, at least. Condos, different story. But we had 4.7 months of inventory in August of last year. The inventory is a little bit higher. It's at 5.4, so it's up 14.9%. Not quite technically into that buyer's market as some people believe it is. May feel like that. It definitely does in certain ways, but it's not. So it was 4.4 months of inventory in Martin County in 24, and it went to 5.1 months of inventory in 25. That's up 15.9%, similar to that 15%-ish in St. Lucie County. So definitely month supply of inventory has gone up, but it is not in a buyer's market. Now, lastly here, Palm Beach County, 4.7 months of inventory in August of 24. It went up to 5.2 months of inventory in August of 25. So ultimately, that's up to 10.6%. That all being said, I'll finish on this. What I'm seeing out there in the market is we're starting to see green shoots. As Chairman Powell said back in the day, we're starting to see the economy. The economy's in one place. Real estate markets kind of has a feeling around that. The stock market's at all-time highs, Bitcoin's at an all-time high, gold's at an all-time high. So I'm anticipating, this is my guess, and I'd like to hear a comment below. What do you think is going to happen? I think as these interest rates drop, I think you're going to start to see this inventory move off the shelf. We had record sales for new homes in the United States. The builders are really doing a lot of incentive programs out there. So if you're interested in a home, I would be looking at the new home market. Give us a call. We know what the builders are doing out there as far as incentives, buy down rates, closing costs, build out packages, and that kind of thing. So we'll see. Looks like we're going to have 2 more interest rate cuts this year. And, the big T in the office there, he's talking about a dovish federal chairman that he wants to appoint next May. So we'll see what happens with that. But I'm anticipating on seeing interest rates continue to drop. And I think that this market will react in a positive way given that. All right, again, please drop me a comment below. Do you think the market's going to go up in the coming months, year? Or do you think it's going to go down? I'd love to hear from you. We'll see you on the next one.